Today, we are going to do financial markets, part 5. And this is about SEBI. So we're going to study the objectives of SEBI and the functions of SEBI. Now, what is SEBI? SEBI is the Security and Exchange Board of India. It has been set up to regulate the working of the stock exchange. There's a huge amount of money involved in the stock exchange. So there is a need to set up a body which can regulate the working to protect the rights of the investors. So let us study a brief history of SEBI. So SEBI was set up by the government way back in 1988. But at that time, it didn't have much right. So whatever the SEBI had, it was not very effective in implementing it, whatever right they had. And it was formed under the Ministry of Finance. This is the only body formed under the Ministry of Finance, which is related to the stock exchange. Then in 1992, it was made a statutory body. It was given all the rights. That means now it is a law enforcing body. So whatever SEBI says has to be implemented. And now we have an act that was passed by the Parliament, and it is called Security and Exchange Board of India Act of 1992. Now let us see, what does SEBI do? So let's start with the objectives. The first objective of SEBI is to regulate the stock exchange. So stock exchange is very big and it has a lot of money involved in it. So it needs to be managed properly. Therefore, SEBI regulates the working of the stock exchange. Then the second objective of SEBI is that it protects the right and interest of the investor. Now, there are a number of investors who have invested their money in the stock exchange. And the stock exchange, the prices sometimes go up, sometimes go down. So the investor needs to be educated as to how to invest, where to invest, etc. So periodically, SEBI keeps on doing that to protect the right of the investor. This is the second objective of SEBI. Then the third objective is to prevent trading malpractices. Now, since a lot of money is involved in the stock exchange, so a lot of wrong things are going on. And because of these malpractices, the money and the confidence of the investor is being eroded. So to bring back the confidence of the investor, SEBI has to look after the various malpractices and stop them. Then the fourth objective of SEBI is to regulate and develop a code of conduct. Now, every big organization needs to have a code of conduct, and all the people who are working in the stock exchange, like the brokers, etc., they need to be professional and competitive. So SEBI also has an objective to develop a code of conduct, a proper code of conduct, how the things need to be done, what are the various formalities that need to be done. All this is to be done under the objective of SEBI. Now, SEBI also has 3 functions: the regulatory function, development function, and the protective function. Let's do them one by one. Let's start with the regulatory function. SEBI has got 7 functions under the regulatory functions. And as you can see that I've marked them, the first 4 functions have been marked in red, R has been marked in red, so that you remember that R for regulatory and R for these 4 functions. So it is easier for you to remember. First regulatory function is registration of brokers. Nowadays, there are too many brokers. There are brokers and then sub-brokers also. So their registration has become compulsory, and this is done by SEBI. Then registration of collective investment like mutual funds. These days, people are investing in mutual funds. So registration of these mutual funds has also become must, because people have trust in the mutual fund, and therefore SEBI makes sure that they are registered. Then regulation of the stock brokers. Now, because stock exchange has become very big, a lot of money is involved. So there are a lot of stock brokers. Now, these stock brokers, they have got sub-stock brokers. They've got the agent who are called sub-stock brokers, and therefore they need to be regulated. They need to be told from time to time what things they have to do, etc. Then regulation of takeover bid. Sometimes what happens, a very big company, it's doing very well. They see a new company coming up doing the same business. So slowly they start buying the shares of that company till they end up buying all the shares, and this new company is eaten up by that big company. So as a result, they have eliminated competition. To stop this, SEBI has made certain rules in which all takeover bids more than 4%, if anybody happens to buy 4% shares in a company, they have to inform SEBI and the stock exchange that they're holding 4% shares in that particular company. Now, apart from this, there are other functions also under this, that is inspection. So the SEBI has been given the duty to inspect and audit the stock exchange. Inspection is a must. So if there's anything wrong going on, through inspection only they'll come to know. And they audit the books of accounts also. Apart from that, they impose some charges that is fees also SEBI collects. And then SEBI also does any other work given by the government of India. From time to time, the government of India has some requirements, or they tell SEBI to do some extra work. All that also comes under regulatory function. So these are the 7 things that SEBI does under the regulatory function. Now come to the development function. There are only 3 development functions, and they are training, research, and development. So training and development, or training and research. So it is very easy to remember. Now, who to train? Who does SEBI train? They train the intermediaries, that is the brokers, etc. Then they conduct research and they publish information, what all is going on in the stock exchange. They keep on doing a lot of research. SEBI has research going on, and then whatever they research, they publish it also. And then they also take steps to develop the capital market. If the capital market of a country is developed, then this is the financial barometer of the health of the country. So then it will give a very good impression about the country. So they take all the efforts that they can to develop the capital market. Then comes the protective functions. Again, P for protective, and all the protective functions begin with P: prohibition, penalty, protection, and promotion. So prohibit unfair trade practices like price rigging. Some companies, they keep on increasing the price artificially. So that has to be stopped. So prohibition. And they give false statement, misleading statements, etc. Then controlling insider trading. Now, insider trading means that the top management of the organization, sometimes they have secretive information. If they leak this information, they can make huge amount of profit. And sometimes they do that. So they end up making personal gains. So this has to be stopped. And for that, SEBI imposes penalty. So they control the insider trading. SEBI controls insider trading, and they impose penalty if they ever catch anybody doing that. Then SEBI undertakes steps for investor protection. Now, investor is the person who doesn't know anything much about the stock exchange, innocent investor. His rights need to be protected. And this is protected by SEBI under the protective function. And then they also promote fair trade practice and code of conduct, so that everything is going on smoothly. SEBI has made certain code of conduct which are compulsory to be followed, so that the functioning of the stock exchange goes on smoothly. So these are the functions of SEBI, and we have done the objectives before. Now let us go on to the case study. Yes. Now, for the case study, I've always told you children that you must first read the question and then read the case study looking for that particular question. So what has been asked? They've asked us to identify the 2 functions performed by SEBI. So let us see what the 2 functions are. Mr. Vikas Mahra was the chairman of IBM Bank. The bank was earning good profits. Shareholders were happy as the bank was paying regular dividends. The market price of the shares was also steadily rising. The bank was about to announce the takeover of UK Bank. Mr. Vikas Mahra knew that the share of IBM Bank would rise on the announcement. Being a part of the bank, he was not allowed to buy shares of the bank. He called his rich friend Mukund and asked him to invest 4 crores in shares of the bank, promising him capital gains. Okay. As expected, after the announcement, the share price went up to 50%, and the market price of Mukund's share was now 6 crores. He shared half the profit with Mr. Vikas Mahra. On regular inspection and by conducting inquiry of the brokers involved, SEBI was able to detect the irregularity and imposed a heavy penalty on Mr. Vikas Mahra. So I have identified the 2 functions. Let's hope you have done the same. So I'll give you a moment and then we'll see the answer. Yes, these are the 2 functions: on regular inspection and by conducting inquiry, and imposed a heavy penalty. These are the 2 lines that have been quoted for the function. You already know the function. Let me share the answer with you. So on regular inspection, it's regulatory function, and SEBI imposed heavy penalty, that is protective function. So that's all in this video, children. Thank you.